President Obama, on his trip to Latin America last week, says the United States is on track to double exports by 2014. He says economies in that region are growing very quickly, and as they grow, demand for goods and services grows. The president says he wants to make those markets open, though, to American products. Joining us now to take part in that conversation is Fred Hochberg, the president and chairman of the U.S. Export-Import Bank of the United States. So with us, Keith McCullough, CEO of Hedge Risk Management, and Michael Brown, our guest host. Fred, great to see you this morning. So how's that program going?
Good to see you. Well, it was a very good trip to Brazil. As you just mentioned, we're on path to double exports in 5 years. We're up 16.8% in the first year. And since we were just talking about Brazil, we're up 35%. So Brazil is growing at twice the rate of the rest of our export markets right now.
What do you think about the dollar currently, Fred, and its impact, certainly looking forward in terms of the inflationary effects in a place like Brazil, who's had incipient inflation problems, over a long period of time, and in addition to that, what that does to the small business owner in America?
Well, first of all, a lot of views of Brazil, a lot of views of Latin America are outdated views. I mean, the Brazilian economy has been very strong. Inflation's been tamed. So it is a very strong market. I mean, Brazil's going to spend about $200 billion on the World Cup and the Olympics. So between the next 5 years, they've got a $200 billion that they're going to be buying. They're buying things like hybrid buses, mass transit, IT systems, solar power, the huge amount of investments. And these are great investments that Americans should participate, that American companies should be selling to fuel those investments.
Well, going back to the question on the dollar, though, what do you think the incipient effects would be of a dollar devaluation on places like Brazil, on emerging markets in general?
Well, I leave discussion of the dollars to the Secretary of Treasury. Tim Geithner really handles those kind of questions. I look at it from an export point of view, looking at the companies that we're helping to export their products and services to Brazil. And, the dollar is always a factor, but so is quality and price and value. I mean, there are many factors that drive those exports.
And we were bringing up a chart that you had showed us before that you're watching at your shop. The question to you, though, to play devil's advocate, Keith, is how much more do you want out of Washington? How much more do you want out of guys like Fred? I mean, we had the extension of the Bush-era tax cuts. Yes, we have the weaker dollar, which could choke off any effect that we had from the extension of those tax cuts. What more do you want?
I don't want Washington to do anything ever again. I want them to get out of the way. Effectively, I want them to stop devaluing the dollar. I want them to stop spending, and I want them to stop coming up with these cockamamie plans to save me. At the end of the day, we don't need it. I think the ultimate reward that Washington hopes for is a recovery in economic growth, and what we ultimately get is a devalued currency like we had in the 70s, and the direct birthchild of that is inflation.
Fred, what do you make of that?
Well, I understand that. I think that we have come through one of the most extreme financial crises of our time, and there needed to be some government intervention to actually keep the banks afloat and to keep the economy going. I think that has been successful. TARP's been successful. GM in the auto industries is stronger than it's ever been, and the government's moved back. I mean, a lot of the TARP has been paid off. The auto industry is paying off its money, and most of the stimulus has also been spent. So frankly, the intervention that we're talking about is largely behind us.
All right, Fred, good to see you this morning. Thanks so much for your time. President and chairman of the U.S. Export-Import Bank of the United States. Keith McCullough, CEO of Hedge Risk Management, sticks around for another segment. Mr. Cockamamie, Russ, I don't know what the equivalent of that word is in London.
Well, I don't think we have a word for cockamamie. That is we use that phrase without actually quite knowing.
That's a universal term, I suppose.
Yeah, we don't know what it means, though.